A simple rule gives you no place to hide. Do you remember how, in that earlier talk about spotting trends without indicators, we focused on reading price action directly? No shortcuts, no clutter. This is the same philosophy. A clean, simple rule keeps you in tune with the rhythm of the market. It forces you to observe instead of predict, to react instead of overthink. Because when you strip away the noise, what's left is price, and price is the only truth that matters. Let's say your rule is this: trade in the direction of the major trend and never fight it. You'd be surprised how many traders violate that rule daily. They see a small pullback and try to short it, thinking they're catching the top. The trend resumes and they're wiped out. Why? Because they couldn't resist the temptation to beat the market. They forgot that trading isn't about being right. It's about being aligned. A single rule like never trade against the main trend could have saved them. But that's the thing about simple rules. They're too boring for most people to respect. A trader's downfall usually isn't a lack of information. It's the inability to stay disciplined when the tape turns against him. The market has a way of whispering doubts into your ear. Maybe this time is different. Maybe you can hold a little longer. Maybe it'll bounce. And before you know it, you've turned a small, manageable loss into a disaster. A simple rule protects you from that voice. It gives you something firm to stand on when everything else feels uncertain. There's also something freeing about simplicity. When your trading is built around a few clear principles, you don't waste energy on endless analysis. You act when your rule tells you to act, and you wait when it tells you to wait. You don't need to know what the Federal Reserve will do next, or what analysts are forecasting. The chart will show you what's actually happening. You can trade quietly, without noise, without panic. And that's where real consistency begins. Ask yourself, what's harder, following one clear rule or juggling 10 conditions before making a decision? Most traders think complexity will make them safer. In reality, it just makes them slower, more doubtful, more emotional. Simplicity gives you clarity. It gives you speed. It gives you confidence in your own process. And that confidence is what separates professionals from amateurs. A simple rule followed faithfully builds habits, and habits build wealth. Because trading is not about brilliance, it's about repetition, doing the right thing over and over again until it becomes second nature. When you follow a simple rule long enough, it stops feeling like effort. You cut losses automatically. You let winners run naturally. You wait patiently because you've learned that waiting is part of winning. That's how consistent profits are born. Not from complexity, but from the quiet discipline of repetition. Think of the market as a test of your own willpower. Every tick is a question: will you stick to your rule, or will you break it this time? The market doesn't tempt you with logic. It tempts you with emotion, greed when prices rise, fear when they fall. And only a simple rule, grounded in your experience, can keep you balanced through both. I've seen traders who built intricate formulas, dozens of variables, multiple indicators, all backtested and optimized. They looked perfect on paper. But the first time the market behaved unexpectedly, those systems collapsed. Not because the math was wrong, but because the trader couldn't follow through. He second-guessed the system, overrode it, made exceptions. A simple rule doesn't need exceptions. It either applies or it doesn't. And that clarity keeps you honest. You don't need to trade every setup, or every rumor, or every opportunity that crosses your screen. You only need to trade when your rule says the odds are in your favor. That's how a trader builds longevity, not through endless trades, but through selective ones guided by principle. The fewer decisions you have to make, the fewer chances there are for emotion to interfere. So while everyone else is chasing complexity, trying to outsmart the crowd with the latest system, remember this: the real edge isn't in knowing more. It's in doing less, but doing it better. A simple rule, obeyed without question, gives you more power than 1,000 theories that crumble the moment fear enters the room. Discipline turns knowledge into profit. You can study charts all day, memorize every pattern in the book, and read 100 trading systems, but without discipline, it all amounts to nothing. The market doesn't reward what you know, it rewards what you do when the heat is on. Every trader eventually learns the difference. Some the easy way, most the hard way. You see, knowledge gives you the map, but discipline keeps you on the road. And the road in trading is full of temptations to swerve, that urge to jump into a trade too early, to hold on to a loser too long, or to grab profits too quickly. Every one of those impulses comes dressed as logic, but underneath, they're just emotion. And emotion is the one thing discipline protects you from. I've met traders who could quote every rule of market theory, but couldn't follow a single one of their own rules when the tape started moving fast. They'd panic, they'd hope, they'd hesitate. And the funny thing is, they always knew what they should have done. The knowledge was there, it just wasn't backed by control. Have you ever caught yourself saying, "I knew I should have sold," right after a loss? That's not ignorance. That's the absence of discipline. Discipline is what separates the professional from the gambler. The gambler looks for excitement. The professional looks for execution. The gambler trades because he feels like it. The professional trades because his setup demands it. One is ruled by impulse, the other by structure. That's why in the long run, discipline outperforms brilliance. You don't have to be the smartest trader in the room. You just have to be the one who sticks to his plan when everyone else loses their nerve. Think back to what we talked about in that earlier video on spotting trends without indicators. How the market itself tells you where to go if you just learn to read it. That skill alone is valuable, but without discipline, it's useless. You can recognize the trend perfectly and still lose money if you lack the patience to wait for confirmation or the courage to ride the move once it starts. The charts can only guide you. They can't hold your hand. Discipline does that. It's easy to be disciplined when the trade goes your way. The real test is when it doesn't. When the market starts drifting against you, when the news turns sour, when your confidence starts to wobble. That's when discipline earns its pay. Most traders fold under pressure because they start listening to the voice of fear. It whispers, maybe it'll turn around. Maybe just one more tick. And they stay in, hoping instead of acting. Discipline cuts that voice short. It says, the rule says exit, so you exit. No hesitation, no debate, no emotion, just execution. The best traders I've known all had routines, and they followed them with almost military precision. They didn't wake up wondering what the market might do. They already knew what they would do under any condition. Their discipline gave them freedom. That sounds strange at first. Freedom through rules. But that's exactly how it works. When you've trained yourself to follow your process, you stop being a slave to emotion. You don't chase losses. You don't rush trades. You don't panic at every pullback. You act calmly because you trust your own structure. Ask yourself something. How many times has your biggest loss come not from a bad signal, but from breaking your own rule? Most traders can trace their worst drawdowns to one word: exception. The moment you say, "I'll make an exception just this once," discipline is gone. And once you break it, it becomes easier to break again. That's how traders spiral, not from ignorance, but from inconsistency. Discipline isn't about perfection, it's about consistency. You'll never eliminate mistakes, but you can eliminate habits that cause them. Discipline is also what allows you to survive long enough to learn. In trading, survival is the real victory. You can't build experience if you blow up your account trying to prove you're right. The disciplined trader doesn't need to be right all the time. He just needs to manage his wrong times wisely. He takes small losses quickly and lets the market teach him. Over time, that patience compounds into understanding, and that understanding turns into profit. When the market is roaring, greed takes over. When it's falling, fear takes over. Discipline is the only force strong enough to silence both. It keeps you steady through the chaos. It reminds you that no trade, no single day, no single outcome defines your success. Your edge isn't in predicting the next move. It's in executing your plan better than anyone else. That's where discipline shows its power in repetition. I remember traders who couldn't stay out of the market even for a day. They felt restless when they weren't trading, as if inactivity meant failure. But the disciplined trader knows better. He knows that waiting for the right opportunity is part of the job. Sitting still isn't laziness. It's preparation. The market always gives you another chance, but it doesn't forgive recklessness. Every time you break your rules, you train your mind to distrust itself. Every time you follow them, even when it hurts, you strengthen your confidence. That confidence builds emotional endurance, the kind that keeps you from flinching when the crowd panics. You can't buy that kind of steadiness. You earn it trade by trade. And the more you exercise discipline, the easier it becomes to act without hesitation. Knowledge may tell you what's likely to happen next, but discipline decides whether you'll actually benefit from it. Without discipline, knowledge stays theoretical, just words on a page or lines on a chart. But when discipline takes over, knowledge becomes muscle memory. You stop thinking and start performing. You act in alignment with your plan, not your feelings. And that's when consistency starts to appear, not by chance, but by design. So when you think about trading success, don't ask how much you know. Ask how well you can control yourself, because the market doesn't reward information, it rewards behavior. Every tick tests your patience, every move tempts your emotion, and every day offers a chance to prove whether you're in control or being controlled. Simplicity in trading breeds consistency. That's a truth most traders hear early, but almost no one truly believes until experience forces them to. When you start trading, you want to be clever. You want to find something new, a shortcut, a formula, a way to outsmart the market. You pile on indicators, you mix systems, you tweak every rule, hoping to make it perfect. But the market has a way of showing you that perfection doesn't exist. The more complicated your trading becomes, the easier it is to lose sight of what actually matters. Price, trend, and discipline. The funny thing about trading is that the simplest methods often work the best, but they're also the hardest to stick with. Why? Because simplicity feels boring. It doesn't satisfy the ego. You want excitement, you want action, you want to feel like you're doing something special. But the market doesn't pay you for excitement, it pays you for consistency. And consistency only comes when your system is simple enough to follow even on your worst day. I've seen traders build charts that looked like works of art, lines everywhere, colors, indicators flashing by and sell signals. It looked impressive, but ask them what they were really seeing and they couldn't tell you. They were lost in their own creation. A simple chart with clear price action, clean support and resistance, and one or two key rules would have done more for them than a dozen technical toys. The market rewards clarity, not complexity. Simplicity also protects you from overthinking. The moment you start adding layers of logic, if this happens and that confirms and this indicator crosses, you open the door to hesitation. You start waiting for perfect confirmation that never comes. By the time you finally act, the move is gone. Trading isn't about predicting the future. It's about reacting to what's already happening with confidence. And confidence comes from knowing exactly what your plan is, not from juggling 100 variables. Think back to that earlier talk we had on spotting trends without indicators. That entire idea was built on simplicity. Just reading the market with your eyes, following the flow of price, and trusting the tape. The simpler your process, the clearer your judgment. The clearer your judgment, the more consistent your results. Complexity hides your mistakes, simplicity exposes them. That's why so many traders avoid it. It's humbling. A simple approach leaves you nowhere to hide when you're wrong. But that's exactly what makes it so powerful. You don't need to be right all the time to make money. You just need to trade in a way that's repeatable. A simple rule like, cut losses fast, or trade only in the direction of the trend, might sound basic, but it's the foundation of longevity. When you keep things simple, you can execute without emotion. You don't waste energy on decisions that don't matter. You know when to enter, when to exit, and when to stand aside. That's how consistency is born, not through brilliance, but through routine. I've seen countless traders chase complexity thinking it will give them control. They believe the more factors they consider, the safer they'll be. But in trading, more information often means more confusion. The market moves because of human behavior, fear and greed, not because of the 20-second indicator on your chart. A simple strategy rooted in price movement will adapt naturally to whatever the market throws at you, while a complicated one breaks the moment conditions change. Ask yourself this: when you look at your trading plan, can you explain it to a child? If not, it's probably too complex. Every great trading idea can be boiled down to a single principle: buy strength, sell weakness. You know, the market has a funny way of humbling a man who thinks he's clever. Every trader starts out believing he can outsmart the crowd until the tape teaches him a lesson he won't forget. And that's exactly why I want to talk about something most folks overlook: a simple but powerful trading rule. Now, if you remember the previous video on how to spot trends without any indicators, you'll see how this ties right into that same idea: reading the market as it is, not as you wish it to be. I've seen thousands of traders come and go, and do you know what separates the ones who make it from the ones who don't? It isn't fancy systems or secret formulas or some hidden signal buried under a dozen indicators. It's discipline, plain and simple. And discipline starts with a rule so simple that most traders dismiss it as too basic to matter. But I'll tell you something: the market rewards the man who respects simplicity. Let me put it this way: when a stock moves, it does so because of one thing: supply and demand. Nothing more, nothing less. That's the pure law of the market. Every tick, every swing, every rally and every crash, all of it boils down to that eternal struggle between buyers and sellers. And yet, people try to make it complicated. They bury the truth under lines, colors, and signals. Have you ever noticed that? They want to feel smart instead of being smart. Now, here's my rule, and it's as old as speculation itself: trade only in the direction of the main movement, and stay out until the market shows its hand clearly. Simple, isn't it? Too simple, maybe. But that's what makes it powerful. You see, it's not the knowing that's hard, it's the waiting. Most people can spot the trend, but they can't sit tight. They want action. They think they're missing out when they're doing nothing. But doing nothing is sometimes the most profitable thing you can do in this business. When I was a young trader, I used to jump in and out of the market a dozen times a day. I'd take small profits and pat myself on the back, thinking I was making progress. But when the real move came, the big swing that makes a man's year, I'd be out. Why? Because I couldn't follow my own rule. I was busy being clever instead of being right. Have you ever caught yourself doing that? A simple rule keeps your head clear when the market starts playing tricks on you. And believe me, it will. The market loves to tease you. It'll rise just enough to make you think you're missing the train, then drop just enough to shake you out. But if you remember that your job isn't to predict, it's to observe, you'll stop falling for those traps. The market doesn't reward opinions. It rewards observation and patience. You remember what we talked about in that last session, spotting trends without indicators? Well, this rule we're talking about now is the backbone of that skill. Because once you've learned to read the movement, the way price behaves on its own, you can align yourself with it instead of fighting it. You don't need to know why it's moving. The why is for newspapers. The what and the when, that's your business. When you see a stock rising on increasing volume, that's not noise, that's information. That's the market whispering in your ear, telling you that money is flowing in. You don't argue with that. You don't try to outthink it. You follow it. But you follow it with a rule in your hand, not emotion in your gut. And the rule says, don't buy because it's gone up. Buy because the market proves it wants to go higher. There's a difference. Do you know the hardest thing for a trader to do? It's to sit still when he's right. Most folks sell the moment they've got a small profit, just to lock it in. But that's not trading. That's collecting crumbs while the cake's still in the oven. If the market confirms your rule, if the main trend is intact, you let it work for you. Don't cut your profits short because you're afraid of giving them back. That's fear, not logic. And fear has no place in trading. The rule also protects you when things go wrong, because they will go wrong. No man, not me, not anyone, can be right all the time. The market doesn't owe you an explanation when it turns against you. It just does. And when that happens, your rule, that simple, unshakable rule, tells you what to do. It takes the emotion out of the equation. You don't argue, you don't hope, you don't pray. You act. You take the small loss because you know it's the cost of doing business. You see, most traders fail not because they don't have rules, but because they break them. They want to believe this time is different. They want to think the market is being unfair, but the market is never unfair. It just is. You can't fight the tape. You can only read it and respond. And that's why this rule, simple as it may sound, is your best defense against your own worst instincts. Let me tell you something. Wealth in trading doesn't come from being right often. It comes from being right big and wrong small. A simple rule helps you do exactly that. It keeps you in line when greed tries to pull you off course. It reminds you that consistency is more important than excitement, and it lets you stay focused on the process instead of chasing results. Because results take care of themselves when the process is right. So the next time you look at your charts, ask yourself, are you trading your setup or are you trading your emotions? Are you following your rule or are you trying to outguess the market? The answer will tell you everything about where your account is headed. Every trader has to decide whether he wants to trade smart or trade often. And if you've learned anything from the way markets move, if you've seen how trends build, fade, and reverse, then you know that the man who trades less but obeys his rule more ends up ahead. That's not theory, that's experience talking. And experience, my friend, is the most expensive teacher on Wall Street. It charges what it wants and only teaches after you've paid. Observation outweighs opinion in the market. That's a lesson every trader learns sooner or later, usually the hard way. You see, most people come into this game with a head full of opinions and a heart full of confidence. They want to believe they know what the market should do. They think if they can reason it out, if they can connect enough dots, they'll stay one step ahead of the crowd. But the truth is, the market doesn't care what you think. It doesn't move because of your logic, your predictions, or your opinions. It moves because of action. And that action is written clearly in the price if you've trained your eyes to see it. Now tell me, how many times have you looked at a chart and said to yourself, this stock should go up? Maybe the company had good news, strong earnings, or a new product everyone was talking about. You felt confident. You bought in, and then the market went the other way. That's the market's way of reminding you that opinions don't pay. Observation does. The tape, the price movement, that's the only truth there is in trading. Everything else is noise. News, rumors, forecasts. They're all opinions dressed up as information. But if you just watch the price, it'll tell you the real story. It'll show you where the pressure is building, where the money is flowing, where the crowd is leaning. All you have to do is listen. That's what observation means, listening to the market instead of talking over it. Every great trader I've ever known had one thing in common. They were students of the tape. They could sit for hours watching the market, saying nothing, doing nothing, just reading what was unfolding. They weren't guessing, they were observing, and through that observation they could sense the rhythm of the market. They could feel when something was changing. You can't get that kind of understanding from opinions or predictions. You only get it from quiet study. When you trade from observation, you're anchored in reality. When you trade from opinion, you're floating in hope. The market punishes hope. It rewards patience and perception. It rewards those who can see what's happening instead of what they want to happen. But observation requires humility. You've got to be willing to admit you don't know what the market will do next. You're not trying to be right. You're trying to be ready. I've seen traders talk themselves out of perfectly good trades because their opinion said the market couldn't possibly go higher. They'd seen too much of a run up, or they thought it was due for a correction. So they stayed out and watched the market climb another 20% without them. That's what opinions do. They blind you to what's actually happening. Observation would have told them the truth. As long as the trend is strong, the move isn't over. You remember how in that last discussion about spotting trends without indicators, we talked about letting price tell its own story. This is the same principle, only deeper. When you observe, you're not just seeing lines or bars. You're watching behavior. The behavior of buyers and sellers, the push and pull of demand and supply. The market is a living thing in that sense, and every move it makes is a signal. But you can only catch those signals if your mind is quiet enough to see them. Opinions, on the other hand, make noise. They clutter your judgment. You start seeing what you expect to see, not what's there. That's the danger. Because once your bias takes over, you stop trading the market and start trading your imagination. A trader who does that is finished before he starts. The market doesn't care about your reasons. It only responds to your actions. Observation builds instinct, but not the kind of instinct that comes from guessing. It's the instinct that grows from thousands of hours spent watching the same patterns repeat. The more you observe, the more you understand that markets don't change as much as people think. Human nature drives every move: greed, fear, hope, and regret. Those emotions are timeless, and they leave fingerprints on every chart. Once you learn to see them, you'll stop arguing with the market and start aligning with it. Ask yourself this: when you make a trade, are you reacting to what the market is doing, or are you trying to predict what it will do? Most traders are always a step ahead in their heads and a step behind in their actions. They predict first, then wait for proof. The successful trader observes first, then acts when the proof is clear. That's a small difference in timing, but a huge difference in outcome. The power of observation also protects you when things go wrong. Because it's not about being right, it's about reading correctly. When you observe, you notice the early signs of a change in character. Maybe the rallies start to fade faster. Maybe the reactions get deeper. Maybe volume dries up. These aren't opinions, they're clues. And when you learn to spot them, you can step aside before trouble hits. That's how professionals survive in the market. By seeing before everyone else sees, not by guessing before everyone else guesses. There's also a quiet confidence that comes with observation. You're not constantly looking for confirmation. You're not anxious about what analysts or commentators are saying. You've seen enough to trust your own eyes, and when you trade with that kind of confidence, not arrogance, but confidence born from experience, your decisions become clearer. You stop overtrading. You stop second guessing. You wait for the market to come to you instead of chasing it. But make no mistake, true observation isn't passive. It's active study. You watch, you note, you test. You ask yourself what the market is trying to say, and over time, patterns start to make sense in a way they never did before. You begin to realize that every breakout, every reversal, every pause has its own logic. That's when trading stops feeling like gambling and starts feeling like reading a language, one that only the disciplined can understand. Most people will never learn that language because they're too busy talking. They're too busy forming opinions, arguing in chat rooms, watching news tickers, and trying to predict the next move. But the trader who learns to stay quiet, to let the market speak, finds himself seeing things others don't. A simple rule followed faithfully outperforms complex systems ignored. That sounds almost too plain to matter, doesn't it? But the market isn't impressed by complexity. It's impressed by consistency. I've seen men with the most sophisticated trading systems in the world lose fortunes because they couldn't follow their own methods. And I've seen traders with a single, clear rule make steady money because they respected it without question. The truth is, the rule itself isn't what makes you profitable. It's your ability to follow it when the market starts testing your nerves. Every trader loves the thrill of finding something new, a clever setup, a secret pattern, a strategy that promises to outsmart everyone else. But after the excitement fades, reality sets in. Markets don't move neatly. They twist, they fake, they tease. And when that happens, the complex system you built in peace and confidence starts falling apart in the heat of uncertainty. Do you know what keeps a trader grounded then? A simple rule. One that's clear enough to act on even when your emotions are screaming the opposite. Take, for instance, the rule of cutting losses quickly. It's the oldest advice in trading, and yet, how many actually live by it? Everyone agrees with it in theory, but when the time comes to take that loss, when the chart looks like it might come back, they hesitate. They tell themselves they'll just wait a little longer. That's not trading anymore, that's hoping. And hope is the enemy of every trader who ever walked onto the floor or opened a chart. Now, a simple rule doesn't mean an easy life. In fact, simplicity in trading is a test of character. It's easy to add layers of logic, filters, and exceptions. It's hard to stand by a single, unwavering principle when money's on the line. But the more complex your system, the easier it becomes to bend it. You'll always find an excuse to stay in a bad trade or jump into one too early. Complexity gives you permission to cheat yourself.